Today, Coinbase cuts back its spending after disappointing earnings. Universal Music Group plans to launch music NFTs on LimeWire. And VCon kicks off in Minneapolis. We talked to Gary V himself about the shaky state of NFTs. Welcome to CNBC's Crypto World. I'm Tanaya Macheel. Crypto prices falling yet again this morning. Bitcoin slipped below $30,000. Ether was worth about $1,900, and Solana fell below $50, making it one of the worst performers today. Bitcoin's down about 3% in the past week. Ether is down about 6%. Compare that to the S&P, which is down about 3.5% for the week. On to the top stories. First, Coinbase is looking for ways to stabilize its business. The information reports that Coinbase told employees to pause new projects and freeze hiring for 2 weeks. Coinbase also wants to find ways to trim Amazon Web Services costs. This is all in reaction to disappointing first quarter earnings. Coinbase reported a 27% decline in revenue from a year ago and a loss of 2 million active users. Next, UK regulators have watched the fallout of Terra USD, and it could shape crypto rules in the country. Bloomberg reported that the Financial Conduct Authority is taking the fall of Terra into account as it drafts new guidelines for the crypto industry. In an interview, the FCA's executive director of markets said the instability of stablecoins will, quote, absolutely need to be taken into account. The UK has asked crypto firms to register with the FCA, and officials have been hinting at impending regulation. Finally, Universal Music Group plans to launch NFTs on a surprising marketplace, LimeWire. UMG includes labels like Interscope Records and Def Jam, along with artists like Taylor Swift, BTS, and a lot more. It's unclear which artists will be getting tokenized collectibles. Oh, and at the same time, Napster also revealed that it's being revamped as a Web3 company. We've come a long way from 2011 when LimeWire paid $100 million to UMG and other record labels for copyright infringement. Speaking of NFTs, Web3 conference VCon has kicked off in Minneapolis. For our main story, I spoke to VaynerMedia's Gary Vaynerchuk. We discussed the conference, celebrity interest, and how the current market volatility has hit NFT sales. All right, Gary, thanks for joining me today. So you are on the ground in Minneapolis for VCon. Tell us what this event is that you've been working on and what you expect to see.
VCon is the utility part of a NFT project I launched last year to stand up an intellectual property called VFriends. When I launched VFriends way back in May 2021, which seems a billion years ago in NFT land, I knew that most people weren't taking advantage of the smart contract, and I felt that the art and collectible part of NFT land was very interesting. I like that stuff, but the real game was what the smart contract is, and I figured the biggest value that I could bring in the infrastructure I had was a super conference, the things I was affected by going through the game in Web 2, like South by Southwest and others. And so VCon is the first, VCon this year is the first of 3 conferences that I'm throwing that came with the first NFT Series 1 VFriend.
There is a lot to talk about there, and we'll certainly get to it, but you're on the ground now. What is it like to see this in person happening?
It's crazy. You know, I'm a huge football fan. US Bank Stadium here in Minnesota is one of the newest football fields in the world, and it's a remarkable venue. And you know, the excitement's there. I mean, the lines are already huge this morning. We had the kickoff party last night that went tremendously well. And you know, to be frank, I'm just kind of focused on over-delivering to the thousands of people that have attended this event.
You have a lot of celebrities from different industries attending. I want to talk in a bit about the growing interest in NFTs within Hollywood, but I also want to ask, because there's been some criticism within the space about the level of education that these celebrities actually offer when it comes to NFTs, to different crypto projects, especially at such a fragile time for the market. So where do you stand on that right now?
I'm in agreement. I think there's, you know, whether you're a celebrity, an influencer on Twitter or anywhere else, I think right now the overwhelming energy of the space is very short term. I would call it greed. I think that many are not spending their time on education, teaching people about seed phrases or cold storage on a ledger, or how to even have connect the MetaMask, or how to buy Solana or Ethereum. This happens all the time. Web 2, Web 1, things that I've lived through, reading the history books of other big moments of innovation. Obviously because of who they are, celebrities are going to get a lot of the attention and they have responsibility with the size of their audience. But I would tell you that it's not super exciting out there.
You've got a membership NFT sort of situation going with a restaurant in New York City. What's the current state of that? How has that project been going? What kind of interest have you seen, and where are you on that timeline?
David Rodolitz, my partner, I'm sure is watching right now and is excited for that question because he is putting the final touches on our location in New York. So we're still on track for Q4, Q1 next year, but what we've been doing to keep interest and intrigue and value to the NFT holders of Fly Fish Club is we've already done pop-up events in Florida, in New York, the Hamptons. There's one here in Minnesota this weekend for the holders of Fly Fish Club. So this is what's so cool about the blockchain. We know who the users are because we know who owns the actual NFT, and our ability to innovate and execute pop-ups or anything else is very high given the technology. And so we're keeping them happy and engaged while we finally break ground and open here next year.
So within advertising, you're also CEO of VaynerMedia. What's the advertising space like with NFTs? We've been following companies like AMC who are using them to promote new film releases, for instance. You see more companies looking to use them, and what does that timeline look at, again, considering this fragile moment that we're at the market?
The fragile moment is in the valuations, things we care about, you, me, the audience. But the consumer behavior and adoption is growing very rapidly. This is like 98, 99, 2000 internet stocks. The internet stocks by Wall Street were grossly overvalued, and there was an internet crash and people were like, oh, the internet's a fad. Meanwhile, consumers were using it like crazy and only growth was going on at that time. Same's happening right now. In the correction of NFT pricing and crypto pricing, that is not slowing down the adoption of people in the game, buying their first NFTs, buying a Solana for the first time or an Ethereum. And so brands, they don't care about what the value is. They care about our customers doing it, and can I use that as a gateway to create consideration for them to buy my soda, my sneaker, whatever that company is selling. And so we're seeing huge demand. Avery, our president, Vayner NFT, has never been busier, from Pepsi to Bear Paint to Budweiser. We are bombarded on a daily basis. A lot of brands are making the mistake of working with their creative agencies to do a campaign in NFT land that is often tone deaf, doesn't understand the Discord and Twitter communities, doesn't understand the security vulnerabilities, and we have seen a lot of sloppy work. On the flip side, we've seen brands really lean into what is a profound thing, which is for the first time ever, we can see marketing as a profit center.
In recent weeks, a big drop-off in NFT sales. Prices have fallen too. Is this tied to recent market volatility alone? And what do you think needs to change to get users interested in the space again?
I don't think so. I don't think this is just Ukraine, inflation, the global markets down. I think it's probably 70% of it, 50% of it. But I think, like I mentioned earlier, there was too much gold rush interest and people just flipping. The core foundational interest is growing. The people that come in for a quick flip, call it Beanie Babies versus stuffed animals. The Beanie Baby crowd needs to lose in their day trading for them to leave, and then you get settled in. And so, I view this pretty much as March 2000 in internet stock land. You got rid of a lot of the bad behavior, a lot of the greed, a lot of the day trading, short-term greed, and you started having the foundational investors focused on it. I think from the investing standpoint, that's what we're seeing on the NFT front, but we're seeing more and more utilities. There's a lot of people here for VCon that own the NFT, just to be at the conference for the next 3 years. I think as companies and entrepreneurs start to understand that it is utility first with a hint of collectability instead of the era we're in right now, which is collectability with a tiny hint of utility. Once we make that flip as operators, I think we'll see a very different result in the ecosystem.
Okay, you can find that full interview over at cnbc.com/cryptoworld. That's all for this week, but we'll be back on Monday and we'll see you then.